Good morning, good evening, good night, wherever you're in this beautiful planet of ours. It is I, Mike Martins, your housing discussion guru, and we're going to take a look at Australia again. Australia is making headlines all over the world, and it's not looking good, guys. Your kids, grandkids, great-grandkids are completely bought out and sold to the highest bidders. Lower housing loans suggest a slowdown in the market. Well, you don't say if you can't get the financing, or you can't, or the stress testing, or whatever they're putting in the way, and the banks are being picky on who they're picking. Now with the Royal Commission sniffing around, making sure everything's being done by the book, which in my opinion, I think the Royal Commission should have been implemented since the time of Moses, but it hasn't. It just comes in after, right? So, lower housing loans suggest a slowdown in the market. So if you can't secure the financing, you're not going to get the deal, right? The Australian Bureau of Statistics, ABS, recently reported that loans for housing continued to drop in September. Examining the data, the Real Estate Institute of Australia, REIA, showed that owner-occupied finance commitments were down by 0.5%, marking the 12th consecutive month of losses. If refinancing is excluded, though, the number declined to an additional 0.9%. The stats with the most significant losses were Victoria and New South Wales. Queensland and Northern Territory. The largest decrease of 0.9% was in Victoria, Western Australia, South Australia, Tasmania, and Australian Capital Territory. On the other hand, had slight increases, with the largest hike of 1.8% seen in Western Australia. Further, the report also stated that the number of established dwellings purchase commitments decreased by 0.4%, purchases of new dwellings and new dwelling construction sank by 1.7% and 1% respectively. Worth noting, though, was a higher number of first home buyers despite the lending crunch. So here's the deal, guys. This is very important. Why is Australia plateauing, or why is it stagnating? Why is it? Hold on, my cat decides to come in my room when it feels like it. Oh, let's close the door here. Okay, what's the deal? Okay, like why was the crash in 2007 and 2008 so spontaneous and happened pretty much overnight, where houses lost 40% of their value in a matter of months? It's because the buildup was within a year or 2 years in Florida. The buildup in housing, increase in value, the increases in value were just astronomical, and that's why it crashed so fast. Australia has been in a bull market, I don't know, since the late 70s, early 80s. So there hasn't been a proper correction in Australia. And then a lot older people would tell me, yeah, Mike, 100%. It's been in a bull market forever. Now, it's like building a wall. The longer it takes to build a wall, the more time you build up this wall, the more time you invest into this wall, guess what happens? It's a lot harder to break down, and that's what's happening in Australia. So I wanted to answer that because a lot of people have been asking me that. What's happening in Australia? Why isn't it dropping? Well, one reason here is securing financing. Now that people cannot secure financing, and with the average median income showing that it's like in some cities 12 to 16 times a person's income for a house, and which is astronomically ridiculous. Watch the on my channel, guys. There's an article. There's a video that's a big eye opener. A lot of people are watching from all over the English-speaking world on my YouTube channel, and this is a very big eye opener for people living outside of the United States, and it's very interesting. Watch this. I'll go to my channel here, guys. Don't forget to subscribe to my channel. Don't forget to tweet me out, share my stuff. And thank you for tipping me in the tip jar. It means a lot to me. It really does. Right here. USA 2007 crash, 2008 current prices. You guys need to watch this video, okay? If you go to my channel, Mike Martins, and you go down, it's upcoming streams, trends in the housing market, housing crisis. Oh, housing crisis. Go to the third one in. It's called the USA 2007 Crash 2018 Current Prices. It almost has 1,000 views from 2 days ago. You need to watch this video, guys. You have to. Because this indicates and shows several pockets in the United States that still have never fully recovered from the 2007 recession and crash, housing crash. So let's go back here. Gunning also emphasized that these results led to conclusion that the housing market is weakening and can later dampen the country's economy. Again, why are you basing an economy of a country backed by housing? Housing never was a commodity. Now they make it into a commodity market. Housing is an investment, an asset, an investment, something you raise your families in. But no, it's become a commodity. It's on a commodity market now. And guess what the country does? It backs its economy off people's slave wages and student loans, and what else is it? Shipping. Shipping is getting expensive too in Australia. To ship stuff with tracking, it's a fortune. There is no bright spot in the latest figures, with the continued decline in housing finance reflecting the slowing market. APRA restrictions, with hindsight, were probably excessive. The fallout of the Royal Commission into Banking and concerns about changes to the property taxation and its impact should there be a change in government. So now it's hinging off government. It's absolutely ludicrous. Government and regulators should be mindful of the impact a lack of confidence in the housing market can have on the economy, he concluded. Let's go back to the top here so we could, right here. It's gonna be a big problem. If you can't secure the financing, watch out. Australia's housing boom is not heading for a soft landing. How did we get there? The hoped for soft landing of the Australian housing market took another hit with the release of the latest housing finance data. We'll open it here. Okay, perfect. There it goes. Total dwellings in millions. And then it goes into owner-occupied housing. Then it goes to investment housing fixed loans. Then it gives you a breakdown. Oh, this is a really good owner-occupied housing, number of dwellings. There's the value of dwellings, number of dwellings, and commitments. There's the September key points, value dwelling and commitments, showing you where the trend is headed. Number of dwelling commitments, it's talking about owner-occupied and finance commitments and stuff like that. Would I trust this? I don't think I can, because it's part of the Australian Bureau of Statistics, and it's really hard because they like to sugarcoat things, not to panic the investor, right? It's all about the investor. It's not about the Australian proper. They couldn't care less about the Australian proper. It's about keeping the investors in check and making sure they are not freaking out and panicking, right? Showing the biggest annual fall in housing finance commitments for nearly 8 years. Both Reserve Bank and International Monetary Fund have recently pointed out concerns about the level of household debt as we reach a decade since the global financial crisis. 10 years ago, in October 2008, the Reserve Bank hit a panic button. It cut the cash rate by 100 basis points. Just a month after, it lowered it by 25 basis points. It wasn't finished. The following month, it cut another 75 basis points. Then in December, another 100 basis points were dropped, only to be repeated in February 2009 before the final 25 basis point cut occurred in April. All up, the cash rate was now 3.25 points lower than it had been 7 months prior. Imagine borrowing at that higher rate, and then several months later, your neighbor next to you or your buddy that used money to open his business got it at pretty much a huge drop. Oh, wow, I'd be pretty choked. Even more astonishing for us now, removed as we are from these Haiti days. Is this meant to crash the rate in 2009? Was 3% double what it is now? For anyone who was left breathless at the crisis level, interest rates, probably the only thing more surprising than the speed which interest rates have been cut would be to learn that within a decade, the cash rate would be at 1.5%. And that, while an economy was growing solidly, housing finance would be collapsing. And yet, that is where we are at. Yep. Australia's going to have to figure something out, because if they don't jump on the bandwagon and start raising rates, we're going to see a huge problem. In October, the ABS calculates the total value of housing finance commitments was 9.9% below than what it was 12 months ago, the biggest 12-month fall since December 2010. In terms, the fall of investor housing finance commitments was 17.7%, but it would be wrong to suggest the drop was all due to investors. Owner-occupier financing down 3.6%. I think it's got a lot to do with the stamp duty tax and all that other stuff that's going on too. Sometimes the trend... Oh, here it is right here. So this gives you a breakdown here. There's the investor. Oof. Oof. There's the total. This is financing, housing finance annual growth. They're not including refinancing in here. So they're not putting the refinancing because obviously people that own could, if they have some sort of equity left in their homes and they didn't take all the equity out, the bank, I think, in my opinion, would rewrite a deal in favor to help the customer. But if they're underwater, they have to find financing somewhere else. So, yeah, this is why housing financing annual growth is going down. See the nice steady decline right here. Then you got this right here. Look at this. Look at that. That's why I've been saying this whole Australia thing's been in a bull market for decades. Sometimes the trend figures can be a bit too slow to show changes in the market, but even more erratic seasonally adjusted figures provide no relief, down 2.7% in the month of October alone and down 13.6% over the past 12 months. There's the trends, and there's a seasonally adjusted right there. And this is housing financing annual growth. So they broke it down into closer increments as opposed to quarterly here. So you could see the trend faster. You could see it, obviously, time-lapsed faster, right? And there it is right there. And once again, once you cannot secure financing, you're going to start to see huge problems. Housing finance, owner-occupied homes annual growth. Again, values catching the refinancers. So people refinancing, and it excludes refinancers, I'm sorry. So this is housing finance owner-occupier homes. So there's the value right there. Value is going with it down. Everything's moving in a decline. There's high housing finance numbers, owner-occupied monthly growth. Again, this is New South. Okay, it's got them all here. Let's see what Western Australia. Oh, that's Perth and all those places. Oh my God. Let's go to Queensland. Okay, that's still not too bad. But these cities like this where you don't see too much decline, it could be old money too. Lots of old boomers in New South Wales. Where it is there? Wow. Oh, household debt to income ratio. Okay, this is the ceiling. This is your debt ceiling, guys. Here, this is your household debt to income. Let's look at, this is pretty bad, guys. And then housing debt to income. It's way over. It's way over the mandatory. In June, the value of Australian household debt reached a record level, 190% of household disposable income. That's phenomenal. How are people eating? Can someone explain to me how you eat? I think people are just eating off the equity, and I think when they're losing, because okay, back in the 80s and 90s, you'd use your equity to open a business. You wouldn't use your equity to eat, because there was so much disposable income. You use your equity for a big purchase, like a big boat, or you buy a second property, things like that, right? But not. You, oh man, it's so bad. Here's the IMF projections for Australia's GDP growth. So I'm not even going to look at that because they could always curve those numbers. Projection for Australia's unemployment rate. Wow, look at the unemployment rates right here. So high back in 13, 14, 15. And then unemployment dropped. And there's the IMF is they believe that the whole country probably will be working. Unemployment will sit at 4.9 points. I think it's a pipe dream. I think, yeah, more people will be working to pay down these debts. Let's move on. Oh, there are the statistics here. Australians' housing downturn could spark interest rate cuts. Okay, guys, you can't cut interest rates. I don't think you understand the dynamics behind cutting interest rates in such a they want to cut interest rates like the first article I read so they could stabilize the market, so they could stabilize and basically give money away. This is not going to work. Slashing interest rates is going to keep the bubble inflating. Australia needs a huge reset. It needs to reset. It can't do this. Okay? It's a well-recognized phenomenon. The older you get, the quicker the passage of time. While it has no basis in science, it's a perception that perhaps a function of supply and demand that as our days run short, they become more precious. Tomorrow, the Reserve Bank of Australia bunkers down again around Martin Place boardroom to debate the state of our economy and what to do with interest rates. Okay, if the economy is good and everybody's working and everything's thriving, interest rates tend to go up because people won't have a problem with the increase in carrying debt. But when interest rates go down, it's because people cannot service their debts. And slashing interest rates will be the biggest mistake they'll ever make. It would bring the country down to its knees. And the U.S. is set to raise interest rates 6 more times next year. In 2019. There's little doubt about the recession. Rates are going nowhere. After more than 2 years of inaction, an Australian record, almost everyone has come to expect that our official rates will be kept on hold at emergency levels forevermore. Most pundits are tipping 2019 to be a non-event for rate movements, with a hike in the winds for as far as 2020. You're going to see the Australian dollar become the Australian peso. It's going to lose so much value under the American dollar. Heck, even under the Canadian dollar. As usual, they'll be sifting through every word in the statement issued after meeting, desperately seeking a clue about the timing of the next move. For more than a year, the RBA board and Governor Philip Lowe have been adamant the next move will be up. So they're sitting there at a chess table. What are we going to do? The rationale goes like this. The economy is growing, inflation is recovering, albeit at a slower than expected pace. Unemployment is low and wage growth ultimately will recuperate. It's a convincing train of thought, but that much vaunted rebound in wages had been long time coming. Each year since 2011, the RBA has forecast a wage growth recovery. Each year it's sunk further, and it now sits at a record low, while household debt to income is at an eye-watering 199%. I'll just say that in Spanish because your ears didn't believe you. 199%. That's a lot. I'll say it in Portuguese. 129%. How long can housing go? Our politicians now have what they have so publicly yearned for, more affordable housing. No, we need to reset. Don't make me pull out delusional Mike and show you houses in New Mexico or in Arizona for under 200,000, 5 bedrooms with a pool. Don't make me pull that out again, because people in the comment section start getting mad. So there it is here. National housing prices continue to decline. Right there. And Exhibit 38. The number of dwellings that are under construction has remained relatively steady for Australia. So these are all the apartments that are going to be coming onto the market, and here are all your houses coming onto the market. All I have to do is just do the sign of the cross like this. Good luck. House regulates your spending. Inflation data, again, slipped below RBA's preferred comfort zone between 2 and 3%. Why? Because nobody has money. Do you remember I did a video last night? Well, go watch this if you're bored. Mike in the Night. Watch Mike in the Night last night. I cover a lot of Australia and UK and Canadian and American businesses. Big retail closures. People are losing faith in the retail sector. People aren't spending. Auto sector. People aren't buying cars anymore. Lots and lots will be affected. Oh, Mike, well, it doesn't affect me. My car is only 5 years old and I don't have debt. Well, go try and fix your car. They're going to ramp up the price of parts, quadruple the price, and then then that's how they'll start getting you, is by ramping up the price of parts and labor. Finderberg panics, demands return of criminal mortgages. So this is today. It would be amusing if it were not horribly corrupt, but the AFR comes amateur treasurer Josh Mainling panic straight into bank executive veins. I would encourage the banks when it comes to lending, in particular for small business. Make sure you get the balance right. Keep the books open. Don't lose sight of the broader public good, he said. We all know that the Royal Commission has brought into focus the issues of responsible lending and examples of misconduct. While both issues are important, I do see them to some extent as separate, with different responses required. Great care needs to be taken around any further changes to responsible lending in order to prevent an unnecessarily restrictive approach to credit. Sadly, in Australia's housing addict economy, there is no division between mortgages and business lending. Given deflating housing assets secure both, neither is there a division between criminal behavior and predatory lending. See the Royal Commission. Charging dead people. In April, the Commission revealed that sordid details in which planners from the Commonwealth Bank subsidiary Count Financial profited from years from dead customer fees. So they pass away and may have money in their accounts, and they just start charging them up the yin-yang. In worst case revealed, a planner knew a client had died in January 2004, but was still almost making $1,000 a year in fines until December 2015. What a bunch of losers. By August, it was also revealed that the National Australian Bank Superannuation Service whacked fees on the accounts of more than 4,000 dead customers. Losers. A month later, in September, it was the turn of the AMP to be caught out charging life insurance to the dead people on their superannuation accounts. Wow, this goes on and on. Wow. This thing's a book. Holy smokes. Disgusting. That's why everywhere everybody's losing faith, absolutely losing faith in the banking system. Why would you trust a bank anyway? Why? They're not there to help you. Just do everything online. Don't even go to the bank. More Australians at risk of homelessness as National Rental Affordability Scheme comes to an end. Thousands of Australians face homelessness, experts warn, as a key way for them to afford a home comes to an end. Owner incentives on more than 36,000 properties that offer discounted rent are drying up as they hit their 10-year limit, with the first subsidies expiring this year. People are going to fall off a cliff. They'll go into homelessness or housing stress in a massive way, said Andrea Galloway, chief executive and communist of housing provider Evolve. Let's get to the graph here. NRAS incentives remaining by the end of the calendar year. So this is probably incentives or bonuses people are getting in this total remaining. Community Housing Industry Association Executive Director predicts only 1/3 of more than 17,000 NRAs properties owned by for-profit sector would continue to offer below market rent. That's not enough. So it's hidden the affordability of rental markets here. ANZ will use global credit agencies broker in blitz on property borrowers. What's it matter? They can't do their own work? They can't underwrite their own deals? What? They can't broker their own deals? What's going on here? ANZ Banking Group is preparing a major overhaul of the way it assesses the checks and mortgages and loans application, including deep dive analysis of applications, income, and introduction of sophisticated credit checks. Sophisticated credit check? You pull the credit bureau, look for gaps on file or past bankruptcies, look for plaintiffs and dockets, look for inquiries, see if they're seeking credit seeking, look for potential hiccups in credits, and then find out why things happen. If there's any mishaps on the credits, underwrite the deal and understand or explain to the lender or explain to the underwriter why things happen the way they did. So there's an in-depth analysis on why the credit bureau is sitting at where it's at. This way, they could give leniency on approving a deal, not making up fake numbers and this. Oh, God. Okay. Deep dive analysis of applicants' income and introduction of sophisticated credit checks. Bank staff and mortgage broker are behind Bearfeared about what to ask initial interviews. Financial documentation required and third-party verification changes that are due to be launched on November 20th. We are making these changes to ensure we continue to do the right thing by our consumers, according to confident briefing notes circulated to the bank staff and mortgage brokers. Okay, guys. Here's the deal. Australia needs to get rid of mortgage brokers. I mean, they can exist. They can find you better deals and blah, blah, blah. I suggest that the banks, like in Canada, you walk into a branch, they do a mortgage application for you right there on the spot. At your bank. Then they send it to the underwriter for approval. The underwriter will be pending approved, or pending declined, depending on the credit or income or your TDS level. So it could come back pending declined. But if it comes back pending approved, then you underwrite the deal properly and explain each section from income to employment verification on the lender and the banks, and to do all that work. That's the whole purpose of a lender and a bank. I'm not sure. Let's see. I think that I don't know why it's based off brokerages. I would not do that. I would do in-house lending, do it properly, because we are lending our money out. Why are we going to get a third party to lend out for us or teach us or do the paperwork? I would never do that. If I had a lending institution, I would do everything in-house. We would do the credit check. We would do the employment check. We would check everything on file. We would do background check. We would do the whole 9 yards if we have to. And then the property they're buying, will do the lien title record to see if there's any liens on the property. If they want to refinance their home, we check for liens, right? We do all that in-house. We don't have to get an agency to do this stuff. It's just a bunch of crap is what it is. Canberra auctions, Duffy, home sells for $632,000 amid slowing auction market. Oh God, guys, don't make me pull up Arizona. I could show you some sweet deals. My lawyer sent me some homes in Tucson and Phoenix, Arizona for under 3 times the size of that with a pool. $203,000 with a diving board on the pool too. Canberra auctions, Duffy, home sells for $632,000 amid slowing market. I'm not even going to get into this. Disappointed. Bank pledge to lend but with Hain Kevitz. The major banks have assured that the government they want to lend more to small businesses, but warned of Hain Royal Commissions that these plans could be derailed if it imposes more rigorous assessment of corporate borrowers. Amid growing fears of the Banking Royal Commission will force banks to restrict the credit needed to grow the economy. Business banking heads to a national Australian bank and Westpac Banking Corp have responded to the Treasurer John Frisbach, whatever his name is, by pledging to keep the doors open and SME customers as both. Well, yeah, let's lend people money to open a business. Yeah, corporate. Yeah, that's a good idea. But little did they know that it was the corporate businesses and all the home businesses and the mom and pops businesses that funded the infrastructure to build these unaffordable homes and streets and hookups to the homes with electricity and water. I'm not going to go there either. Not even going to go there. Are Australian house prices going to join the Canadian club? Canada. Remember, guys, I'm in Canada. I'll be doing a Vancouver. Oh, we saw this already. With house prices falling, Australia is entering unknown territory. Yeah, you know what the territory is? It's going to crash. Nervousness is gripping the nation. The house finance data that came out on Friday will only add to the nervousness. A 3.8% fall in lending for housing just 1 month. That is huge. But we don't need to go forward with our eyes closed. Just across the Pacific in a country we could learn from. Canada's housing market is a lot like Australia's. Ding, ding, ding. What have I been talking about for the last 7-8 years? It's all the same in all the English-speaking countries. Like us, Canada has no major fall in house prices during the global financial crisis. Like in Australia, official interest rates fell, making borrowing very cheap. House prices soared, and household debt went with them. So artificial bubbles, right? Older and wealthier Canadians got caught up in the frenzy of investment, while the younger portion worried about affordability. It could almost be Australian, right? The epicenters of the boom were Toronto, Canada's biggest city, and Vancouver on the Pacific coast. Their enormous house prices boom continued until 2017. Then, while Australia was still appreciating, Toronto suddenly stopped. If you follow my channel, we've been following this. Toronto house prices entered a dramatic fall. This frenzy is over. Toronto's housing bubble finally pops, screamed the headlines. It sure looked that way. Toronto's house prices fell fast. For 2 consecutive months in late 2017, houses were losing 3% of their value a month. In the next graph shows, there's Toronto price. And look at that, house price index to volume. Vancouver versus Toronto. Look at that. I've been covering this for a long time on my channel, so you guys should know this. If you've been following me. We'll be covering Canada tomorrow. Van City Blues. As mentioned, Canada and Australia are very similar, mid-sized. Wealthy countries dependent on resources and exports. Safe, stable, English-speaking democracies with similar desirability for Asian investment. Investment that both countries have managed with special taxes. Canada's interest rates are at 1.75% compared to Australia's 1.5%. The list goes on. But there are differences too. Canadian homeowners mostly have fixed rate mortgages, making them less vulnerable to mortgage rates rises. And Canada has absorbed a few official interest rate rises already, while Australia's rates remain at record lows. That's what I'm saying, guys. Australia better start raising rates here. We can't be sure all the factors are affecting the housing are all the same. So long as Vancouver was continuing to rise, Melbourne and Sydney fell. Canada and Australia look different. So it is especially interesting that the past few months, Vancouver has shown the few signs of price falls. They are small so far, but there have been other signals, just like we follow auction clearance rates. Canadians watch house sales volumes. The number of homes sold in Vancouver in October 2018 is more than 33% lower than October 2017. There is enough weakness in Vancouver to ask whether it might be about to tip over. It is. And I'll be covering Canada tomorrow, people. Canada and the UK tomorrow. I suspect there are a lot of eyes in Vancouver focusing on what has happened in the Sydney and buckling their seatbelts. A fall in Vancouver could take Toronto down on another dip too. So Toronto took off so fast because once Vancouver implemented the foreign buyers tax in Vancouver about 20 months ago, everybody ran to Toronto and then blew the prices up. And then they put the foreign buyers tax in Toronto. Everybody's in Montreal now, north of Toronto or northeast of Toronto, wherever you want to call it, blowing up the housing market there. Right now, it's going crazy in Montreal because investors have made their way north. And then it got divided because then the foreign investors, half of them went south to Seattle and blew that up. And housing prices were going up $20,000 a month. And the ones that went to Toronto, that went nuts too. So it kind of got split in the middle. So everyone left Vancouver. Now Vancouver's stagnating in a swamp and it's just sitting there. And it's not going up. It's declining slowly. If 4 major cities in Canada and Australia all start following in sync, it would be enough to start to suspect they're all at the mercy of the same global forces, interest rates, and liquidity. If you want to have a full picture of what will happen in the Australian housing market, add Vancouver and Toronto to your list of cities to keep an eye on. Canada's spring selling season is coming up in 5 months, and it would be very interesting. And we're going to keep our finger on the pulse here. I'm in Vancouver. I'll get Steve, and I got people out in Toronto that call into the show. So I wanted to do this, guys. Don't forget to join me, guys, Wednesday nights on Trends in the Housing Market, guys, before I forget. And I've been following all English-speaking countries for many years now. Is Australia the next big short for global investors? Oh, man, all the banks. I think all the banks are big shorts. Too short or not too short? So I'm going to have my financial analyst, Andrew, on the show. Economic analyst, financial analyst. We'll get him on the show maybe tomorrow or the day after and finding out what's going on in Australia there. Teacher outbids 3 other first home buyers to buy Fla 2yrs apartment. Okay, so it's first home buyers. Ooh, an apartment. What did it sell at? $570,000. Nope, hammer came down at $587,000. We'll leave that there so we can see what you could buy for $87,000 in Texas, okay? So this is an apartment here. There it is. Okay? $587,000. $27,000 over reserve. The humble area bucking Australia's grim house price crash trend. You're going to get a lot of mixed reviews.
Are you concerned about falling house prices, and also are you concerned whether the Royal Commission will tighten lending standards?
Well, certainly when it comes to implementing the recommendations of the Royal Commission. And I have to say, Commissioner Hayne has done an outstanding job. Anyone who's read the 1,000-page report can see how comprehensive, forensic and professional he has been in putting together the evidence of the misconduct and the inappropriate behaviour in the sector. But when it comes to implementing the recommendations of the Royal Commission, we will of course be very careful to ensure that competition is maintained and that we ensure Australians get access to credit in a way that doesn't harm the economy. And I think we've all got to be conscious of that. Now, when it comes to the housing market, what we've seen is the prices come back to a more sustainable level. This is healthy for the economy. This is what the Reserve Bank had wanted. This is what APRA, as the prudential regulator, had intended when it tightened investor loans. But what we can't afford is the Labor Party's wrecking ball to the housing market in the form of their new property tax. By getting rid of negative gearing, they will be smashing people's house prices. They will be driving up rents. And they need to now explain to the Australian people why, with housing prices coming back to a more sustainable level, they want to take this destructive policy to the next election, and why they want to see people's value and wealth and equity in their own home fall. That's what their policy is going to do. Let's not forget that 2/3 of the people who have negative geared properties, there are more than 1 million Australians with a negative geared property, 2/3 of them have taxable income under $80,000. This is teachers, nurses, school teachers who are going to be attacked by Chris Bowen and Bill Shorten's new property tax.
Okay, guys. So you don't need Chris and this other guy to make this. This is going to happen on its own. So I think they're going to looking for a fall guy because the market will collapse. They're calling it a correction, and everything's coming to normal. Affordability is not there, and people are not securing the securing financing for the home. Housing loans surge, but rise in fears of defaults. Again, mainstream media. Australia's housing downturn by design. Macroprudential measures to curb investor lending for a downturn to turn into a crash. Said there will need to be a sharp rise in mortgage rates or unemployment levels. So they're stagnating it. So you're going to have this whole sector of people, probably 25% or 30 up to 40% of the country, that will never own until they remove the stagnation and people could afford to buy. And that's why people are moving to Hobart and all those other places, because it is more affordable. Benchmark interest rates are almost certain to stay on hold at 1.5% when the RBA makes its monthly policy announcement this afternoon. But with Sydney and Melbourne house prices still falling, there'll be extra focus on the RBA's housing commentary, particularly regarding tighter credit conditions. However, when it comes to house prices, Bank of America Merrill Lynch says the RBA will be in no rush to indicate a shift towards more supportive measures. We do not expect the RBA to respond to the correction with the signal it might ease policy. They backed up their argument with this chart, which shows Australia's household debt levels are still a key macro risk. Yeah, of course it is. Man, look at Canada, man. There's Australia right there. So what? 199%. Sydney house prices have fallen 7.4%, and indicators suggest the current Sydney downturn could end up being the longest in history. Why? Because they're not raising interest rates. Why? Because they're not putting proper measures into place to protect the Australian proper. Vancouver did it. They have foreign buyers tax. They have vacant home tax. They have all this stuff to discourage foreign ownership. Why? Because everyone left Vancouver. I'm one of those people. I left Vancouver. I moved to a small town called Merritt. I live in a small town. I'm not spending $2 million in a bungalow. Sorry. Not going to happen on my watch. And regional tsunami becomes Australia's hottest property as Hobart looks to set to outprice Perth. Why is it outpricing Perth? Because the mass exodus of Sydneyans and people from Melbourne and people from all parts of the mainland went to Hobart, and now pricing is out of control there, only because a lot of middle class workers or middle class families were sick and tired of renting, getting nowhere in life, and not making headway. And same thing in my town, where my little town here, pricing is going through the roof right now. I'm lucky I bought when I did. And that's that, guys. Yeah. This is my channel, guys. There's trends in the housing market. We cover all countries. We get people to call in. Housing crisis, where you'll find this video. Watch this one here. This one here is important too. Foreign buyers tax to hit Montreal, because Montreal now, that I've said earlier in the show, where the foreign buyers tax hit Vancouver, everybody went to east to, well, half the people went east to Toronto and the other half went down to Seattle. The ones that went to Toronto got hit with another foreign buyers tax and taxes and vacant home tax, and then those people went northeast to Montreal. So you see where I'm going with this, right? So yeah, and there's Mike in the Night, and I discuss a lot of this show right here. I discuss a lot of business closures that are headed our way. So let me know what you guys think in the comments below. Don't forget to tweet this out. Don't forget to tip me in my tip jar. I appreciate it, guys. I'm getting tips from everybody. A couple of bucks here and there. It all adds up. It helps fund the transmission. It helps fund all this time I put in to get this message out to you guys, to make the right choice in life. Anyways, thanks for watching, guys. Comment below. God bless.